Hi everyone. Today is September 11th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are looking at the ES Weekly today, seeing that we're trying to walk up this wall of worry. And so what I like to do, if I can find my Fibonacci, I do like to see where that 50% marker is sitting. Certainly 61.8 gives us this number right here, but I do suspect we breached that. It feels like, open quotations, feels like our CPI number, which we're going to have in just about 20 minutes, should give us either a massive bounce and then a fade, or a fade and then a bounce. Now, you're like, thanks, Captain Obvious. What can I take away from that? Well, here's the beauty. When we sit in trend and market expands based on a news event, the ideal place is to watch for positioning when a chart begins to move like that comes from looking at the wider time frames. We know the trend is up, so we know the savage dips will be bought. That's the one thing that we can feel quite certain about. And so let's go to the dailies. And what we're going to see is that we have our third day of higher lows and a little bit of heavy congestion coming in to this zone. And so let's see what Menthor Q, I'll be looking over here on another chart, so forgive me. Let's see what Menthor Q has for key levels. Yesterday they had 55.05. It was literally, good grief, on the spot in terms of positioning. And so that is probably going to be something that we see again in the chart in general, that 55.05. Sorry, I was looking for the really clean levels and I've got my own Fibonacci sitting all over it, so forgive me. So it does look like pullbacks or buy zones. We are sitting above the VWAP. We've been buying dips. Europe's open was a little soft, but we did hold that edge, and now we're headed up again. So my suspicion is that we breach into the 55.05, maybe even to the 55.35, and then fade. You see the wicks? There's fading to be had here. So pullbacks look like buy zones to me. Because it's a big news event, it could be a very deep dip. So unless you're looking for something way down here at 53.88 or something to buy, I wouldn't put out a limit order anywhere waiting on that. Okay, I don't have any idea whether the number's going to be hot, cold, whatever, but what we do see right now are sellers coming in, and price action should get a little quiet into the next 20 minutes or so. Where are the levels upward? 55.34, 55.61, and 55.84. Where are they on the downside? 54.64, 54.35, and we've got this higher low here. So it'll be nice to see if 54.47 holds. It should, but we do have this low volume node for the value area low that we might come in to play. And that number is at 54.05. Let's look at the corresponding SPY. Flat, moving average. You can see mean reversion. Higher lows tell us that buyers are coming up from underneath, but the pressure event is still downward. That being said, if we breach the high of yesterday, which is 549 and some change, we should get into 551 and potentially 554. If we have a sharp downward wick coming from the CPI, the first pass is going to be buyers. The group of buyers are going to come in at the low and try to push price action up. If it does not hold, we will continue downward. There is a little bit of negative drift with the volume by price, but in general, it's a bit wicky, as it were, right? Where's the top end? 554. I really don't think we head up to the POC. the POC, point of control. 551. Below us, we have 544. The VWAP region, which is 542. And then this area down here, which is 537. In the grand scheme of things, we've got bullish motion. We are looking at sideways pressure. Could it be that we fade and then bounce and then fade and then bounce? Yes. Why is that? If you listen to somebody like Jem Karzan, he could give you all kinds of complicated things about market flow, but at the end of the day, traders are naturally bullish. They're nervous going into an election cycle because they don't know if they're going to have gridlock. And then we've got these, profiles that we have to fill in. Not really a space where we need to overthink, just realize that big dips are still getting bought, but they can be very big dips. Intraday, we've got ourselves bullish motion. And that means dip buying is going to be the most risk limiting event that you can look at. All right, on the weekly formation, up, trying to recover, trying to walk up the wall of worry. My thought that the next leg up is 19,138, 19,433 after that. And then below that, we have 18,390, where we opened the week, and then downward flow to 17,950. But by and large, it's a pretty hot mess from a weekly perspective, right? You've got to tighten up the length of time you're spending in a trade because a lot of these candlesticks are retracing each other, and they only give us a couple of days in one direction, or a few days, right? 4 days in one direction. Now we're looking at 3 days in the next direction. That's very common when we have cross currents in our price motion. Okay? Remember, trend intraday is up, so you look for your pullbacks of heavy congestion to take the long, and if you take the breakout, be quick or you're going to be dead. Okay? That's just something that's going to happen. Okay, let's go to the Qs. We'll get the numbers there. All right, taking a look at the weekly, coming into test. This bounce action literally was on cue. We talked about it, all kinds of ways to frame out trades like that, but it's key that we do it at the key zones in the direction of trend. Okay, so now that we're looking at this, we watch the bounce. It should come up, quotations, come up into the 465 area and then have a little bit of fading. There are a lot of charts that have been holding the NQ very high, and those charts are having a little bit of trouble right now, so it is in a little bit of a reflexive pattern, but notice price compression. We have 4 big days down, 3 days up, 2 days down, so we're getting both lower highs and higher lows, and that is going to lead to some kind of spectacular break. I just don't know where/when, but we can approximate that it's going to be in one or two of these directions, right? Either up or down. I know, but that's what happens right now. That's what happens right now. We are in a cross current, and if people are saying, if you are finding yourself listening to folks going, gosh, they're changing their minds direction-wise all the time, it's because there's so much flow that's in an area that's choppy as could be without trend per se. We're going to have to change our minds. Okay, so there we have it. We talked about the Qs, we talked about the NQs. Let's go to the YM. I don't like to look at the DIA simply because the diamonds, they just don't have enough volume to really give us what we're looking for. All right, so here we are. Yesterday, let's look at the week. Old resistance, new support. We're still the cleanest shirt in the dirty laundry, as it were. But I do want to move this 40,400 area down because we broke it pretty hard, right? And so I'm going to use wicks where I can touch the area and have candle closes. And so that's a combination of this region to the left at about 40,298 and this region that we just had last week, which is, it's right at 40,264. So that's what we're staring down. We did bounce and then fade. Take a look at yesterday's price action. We had First, we had the sharp fade that came off of the edge. Remember, I said, hey, listen, this is real resistance. We're going to either break out and fade, or we're going to fade and then bounce. First thing we did was fade, and then we bounced. Where did we bounce from? The VWAP of the formation. I find that to be very interesting. I need to put an alert there for today, but that is what we're looking at. Now we've got an inside candle. It's inside the range, not inside the body. What are we staring down? Well, higher lows, but also lower highs. So you can have a two-way market here. It's as simple as that. Could we bounce off 40,645? Yes. And then the next level would be, wait, I'm going to move this one down to where these edges are, right? So if we get above this 40,744 and we start to recapture the close of the prior day, more buyers are going to come into the mix. So above 40,794, we've got buying action into 41,063 with the point of control making things very messy and very sideways, or we fade back down, hold support. Listen, this is where I believe we're going, into the 40,000 area, because it's the value area low and a region of retest that should come into play. All right, that is what I suspect. I suspect it quite a bit. So that being said, that's what I'm looking for. If it loses 40,298, I do believe it gets to the value area low, which is about 39,944, and then even 39,709. All right, so we had the debate. I will say that it's very disappointing, the type of leadership that we've got, but very customary in a fourth turning. If you haven't read Neil Howe's book, The Fourth Turning, I promise you, you will love it. It's very good reading. It's very entertaining. It's not dry. It's just good. And we're in a space where we have an absence of clear, solid, good leadership. So it is what it is. All right. So here we are sitting just at the 65 level. Remember I said, hey, listen, this zone, supremely important. It came right into that 65 zone and bounced. And now it's sitting at the do or die. So my thought is that it's going to accelerate into the value area low. Maybe the value area low is all the way up at 72. It could go up to 71 and then try to make a base down here. This is the price action I suspect. Now, if we're wrong, we meaning I, if I'm wrong here, let's see what these Fibonacci's will give us from the last wave. Ooh, wrong direction. The last wave of motion here on this edge, the 1.618 all the way down at 55. Holy smokes. The big fat round number at 60 is a glaring number, but we could be in a whole heap of trouble. Now, the CTAs are sitting potentially in the wrong direction here, but we can talk about that later. This is just what we're seeing here. This is also a contract roll for the indices, and that means that it gets a little wonky. Price action does. So ES, YM, NQ, the whole lot of them, they just are going to be fairly messy over the next few days. A lot of sideways action. It's very, very messy. Flow is very hard to read. But as it sits, gold continuing to rise. This is going to continue to rise. Now, should it come back and give us a nice bounce? I would love for that to be the case, right? I really want it to come in 24.29, and then we'll have ourselves a big move up. CPI should affect gold. It should affect gold, but I don't know how. And that's just the thing. I'm going to look for the areas that people have bought in the past, 2460-ish, 2470, old resistance, new support. But look at how thin the profile is here. That means that's why I'm looking down at this 2435 to 2429. All right? Okay, folks, that's it for me. I'll see you on the platforms, and particularly the Benzinga Pro platform today. It is Wednesday. We'll be having our team meeting, and we'll be talking about the trades there. All the best, everyone. Stay alert.